Hello, and welcome to the second programme in the series covering the Victorian Standard Chart of Accounts for non-profit organisations, which is presented on behalf of the Office for the Community Sector. My name is Eddie McFall, and I'm a client manager from Matrix On Board, a consultancy company that works exclusively with non-profit organisations building capacity in financial management, governance and management support. I'd like to welcome you to this, the second of 4 training programmes, and the purpose of this programme is to introduce the Victorian Standard Chart of Accounts in more detail, outlining the key features of how it is structured, as well as practical aspects of dealing with the Standard Chart of Accounts in conjunction with cost centres. This programme is more aimed towards finance staff and treasurers, as it covers some of the specifics of the Standard Chart of Accounts in detail. Accompanying these training programmes is a participant manual which you can download from this site. To answer any key questions about the Standard Chart of Accounts and to provide advice and resources, there's a telephone help desk, email support and further information, which can all be accessed from this site. Please note that implementation of the Standard Chart of Accounts is voluntary for Victorian not-for-profit organisations who can still choose to use their existing Chart of Accounts. So what are some of the key features of the Victorian Standard Chart of Accounts? It was specifically developed for the non-profit sector. The Australian Centre for Philanthropy and Non-Profit Studies, plus key stakeholders in Victoria, undertook extensive research and work to capture the types of transactions that are particular to the non-profit sector, such as grant funding, donations and fundraising. There's been the development of a data dictionary to accurately describe and distinguish transactions. And also there's been the alignment of the Standard Chart of Accounts with key accounting standards and legislation relevant to the sector, such as the Associations Incorporations Act, Fundraising Act and the Australian International Financial Reporting Standards. From this screen, you'll see that the Standard Chart of Accounts has 5 key components. From the left, a list of account numbers. These specifically relate to MYOB, but may also be used in other accounting software packages. A list of account names, a data dictionary and description of the account, the International Financial Reporting Accounting Standards reference, and other comments which provide additional information on that particular account. Now, the data dictionary is where a huge amount of work has been undertaken to build a comprehensive and common financial language from which all parties working in the non-profit sector can benefit. Let's focus on a particular aspect of the Standard Chart of Accounts: header accounts. In the Victorian Standard Chart of Accounts, there are some generic header accounts which provide an opportunity to tailor certain sections by inserting accounts that are particular to your organisation. For those who are not familiar with the term, a header account is an umbrella for associated types of transactions. Transactions aren't actually posted to a header account, rather the header account groups and aggregates the accounts that contain associated types of transactions. For example, a salaries and wages header account will aggregate all the expenses for accounts that contain payroll costs. In the Standard Chart of Accounts, client support services is an example of a header account in the expenses section, where you can add accounts that are specific to your organisation. The header account represents all the costs for services provided to clients, members or participants, and the data dictionary provides guidance on the types of expenses that would be included in the header account. What I'd like to talk about now is the difference between a chart of accounts and cost centres. And the reason for this is that a common mistake made in accounting programs is where an organisation extends the chart of account to accommodate new projects or programs, when in fact they should be creating a cost centre. This is a common mistake which I see quite often, and the issue is that it builds into your accounting system an unnecessary level of complexity which makes meaningful information more challenging to obtain. It also undermines the integrity of the Standard Chart of Accounts. By the way, a cost centre is a generic name. In MYOB they're called jobs, and in QuickBooks they're called classes. As you can see from the example on the screen, there are three accounts: superannuation, salaries and wages, and travel and accommodation. Now in this example, up until recently, this organisation grouped three of its projects together, but for transparency and acquittal reporting, they decided to separate its three projects out. And these projects are outreach, children's programmes, and education. On this next slide is where the common error occurs. As you can see, the organisation has created a superannuation, salaries and wages, and travel and accommodation account for each project. The issue that we have is that this chart of accounts doesn't aid transparency or acquittal reporting, as it's not straightforward to immediately see the expenses that are relating to one project without manually adding different project accounts together. Also, from an organisational perspective, to find the total cost of salaries and wages, for example, three separate accounts have to be added together. On this next screen, you can see that rather than extending the chart of accounts, three cost centres have been created, one for each project. The benefit of using cost centres is that the financial transactions for each project are clearly identifiable, which greatly improves the reporting for internal purposes and funding acquittals. In addition to individual projects, it is simple to gain a financial overview of the whole organisation. Normally, a cost centre will be created when a project has specific funding and expenditure which needs to be tracked and acquitted. Or, for internal management purposes, you may wish to track a project separately from other projects. That brings us to the end of this training programme, covering the standard chart of accounts in greater detail. The next session covers the first stage of implementation and how to convert your accounting software to the standard chart of accounts. I trust you found it informative and worthwhile. I'll see you in the next session. Thank you.